Rising mortgage rates and lingering inflation are forcing many Americans to put plans to buy a home on hold. That in turn is pushing up rent prices for others. And no one has experienced that more acutely rather, over the last year than people of color, as economics correspondent Paul Salman explains as part of our series, Race Matters.
My baby don't care to own a 9 or 10 carat stone.
After a lifetime of performing the world over, Lily Adams, 74, is back in her hometown. One of more than 59 million Americans, 18% of us, living with family, her daughter and son-in-law in suburban Detroit. But she needs her own place, and it better be a house.
For me. I can't stay in any apartment because I make noise, I have to play.
If you have an apartment, you'll be making too much noise for the neighbors, is that it?
I need a place like this place, if possible. And I probably would go back doing some teaching too. And nobody wants to hear that.
Adams says she can afford a $100,000 home in the up until recently bargain basement Detroit market.
There are houses to be found. The problem is finding the financing for these houses.
That's because of spiking mortgage rates, which have doubled in a year.
They started incrementally going up, till it reached a tipping point and making it just impossible.
Enough money for a fat down payment, of course, and rates wouldn't matter so much. But Black Americans like Adams were actively prevented for decades from building home equity, the bulk of the wealth base for most other middle-income Americans.
From the 1930s to the 60s, the federal government embarked in redlining, which was a racially explicit housing policy that provided home loans to white families and denied those same loans to black families.
Thus, says housing researcher Rahim Hanifa, a Detroiter himself, blacks have too little equity to cash in for a down payment. And now, suddenly, the mortgage rate spike.
You'll see that there's been a decline of 52% in home affordability for black households.
Even in bargain basement 77% black Detroit?
Detroit is one of those cities that is no longer affordable to low-income families.
Like the family of post office employee Angela Smith, renting the last 4 years. She needs to put down only 3.5% because of a government program, but she explains,
you try to stay on top of the bills that you already have, and then you're trying to save money to buy a house. I mean, do you not eat? Do you not pay your rent? Then gas went up to $5. So what do? You not put gas in your car to go to work?
The interest rate surge is killing her budget already. What's more, Smith needs that car just to get to her job.
And the interest rate on that car is terrible. It's like 19.49% I'm paying on that car. I'm paying $659 a month for this car.
Mortgage rates are crushing folks like Smith. Best offer we could find online for a $100,000 house, her 640 credit score, a 15-year mortgage with a 6.3% interest rate, $788 a month on a salary of less than $40,000 a year before taxes, union dues, etc. But of course, it's not just for homeowners of color that mortgage rates are discouraging. Samantha Masheri, for instance.
We've set a budget, and now with interest rates, every few weeks to a month or so going up, and us not finding a home every few weeks to a month, it makes us want to stay where we're at and not get in this rat race.
I'm Ed Butler. If you're new to the channel, I make videos about living, working, sleeping, eating, and playing in Detroit.
Local real estate agent Ed Butler takes to YouTube to help buyers navigate the Detroit market. But with the new mortgage rates, says Butler,
for buyers who are shopping in a certain price range, they no longer can afford their payments. So they're deciding to either rent or just stop their search at all.
Deciding to rent. That's the less told story of higher mortgage rates. Nationwide, the median rent is up 24% in the past year to about $1,900, a record high for the 16th straight month.
With interest rates going up so dramatically, there are fewer people looking to get a mortgage and more people who are currently renters ending up staying renters.
Peter Hepburn of the Princeton Eviction Lab.
And that means more competition for a limited set of rental housing.
And this is an added problem for those just getting by, in an era where increasingly landlords are investors.
The share of new purchases for rental housing that are coming from investors has been increasing steadily over the last decade.
The problem is those investors have few qualms about raising rents, and thus more evictions. And evictions are picking up in Detroit, including among smaller landlords, like the one this tenants group has organized to resist.
I'm being evicted for a late payment in rent in April.
32-year-old David Chevarria is a sanitation worker in Detroit's sewage industry. He paid his rent, but
Basically what their lawyer said was, now I'm causing a ruckus in the building.
well, are you causing a ruckus?
Yes, we were resisting rent raises based off of the condition of the building. The elevator was out for 8 months, and for us that live on the 4th floor, that's pretty significant.
Fact is, says Chevarria,
A lot of people on our street can't afford to pay the increases in rent.
but because of the hot rental market, others can. 71-year-old Louis Bass, a retired chef, has lived here for 15 years, but recently new management took over. So they're just trying to force you out.
We are being forced out to be replaced by somebody who's willing to come in and tolerate the conditions as they are.
Fewer people going on to buy their homes means more people staying renters, means more competition for limited apartments.
Even in iffy conditions. The new management's response? Inflation is killing everybody right now, so you have to continue to raise rents on a regular basis, otherwise you wither and die. The landlord says he fixed the elevator and insists that the only evictions are for non-payment of rent. Meanwhile, in recent weeks, as interest rates continued to climb, housing prices have finally stopped rising.
In the market, we've started to see a lot more price decreases and price drops than we have in the last few years. So naturally, that average price point is going to either stabilize or pull back.
Again, Detroit realtor Ed Butler.
The rest of the country is kind of experiencing a slight cool off. Us, we're doing it a lot more because we have a little bit more inventory than the rest of the country does.
So, good for buyers like Samantha Masheri?
We go to see these houses, and when we're finally crunching numbers and saying, okay, we want to do this, we want to do that, we like this house, yada, 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 then you get to the point where your interest rate is now, 2 and 3% higher than what we're currently paying. So is it really going down, or is it just kind of shifting over? So who are we paying more to? The seller or the mortgage company?
Though I guess if you buy now and mortgage rates eventually go down, you could refinance at a lower rate. So mightn't that give hope to those like Lily Adams? Do you think you'll be able to buy a place?
Yes, eventually, yes. I believe so.
How so? I mean, is it just because you're that kind of person?
I'm that kind of person.
Let's wish her luck. For the PBS NewsHour, Paul Salman, enjoying my first interview concert, as I hope you are.